But when I came into the industry in the 70s, Adam, just to put it in perspective, we averaged 10 million shares a day. 10 million shares a day. Think about that. You have a stock like NVIDIA that trades an average of 250 million shares a day today. We in the 90s we were in a half a billion shares a day. Just on April the 9th, we traded a staggering 30 billion shares. 10 million shares a day to 30 billion shares. So I would say to you that what's happened over, it's been a great journey for me. It's I think an incredible testament to our industry, because what you mentioned hiccups every now and then. However, every time we have those hiccups, I have found that our industry has gotten better. In the 80s, you had electronic trading introduced.
Right.
You had NASDAQ come into the game. And back then, the New York Stock Exchange, with all the regional exchanges, the Philadelphia Stock Exchange, the Pacific Stock Exchange, the Boston Stock Exchange. I hate the term regionals because they were part of the national market system with the New York Stock Exchange. And they did battle with NASDAQ, who was considered
the new fellas.
Yeah, the new fellows to the game. But today, I mean, and when you walked into an investment bank back in the 70s and 80s and 90s, there was a separation between the over-the-counter desk or the NASDAQ desk and the listed desk. Today, that's no more. We're all together.
So let's break this down, and we're going to get to what happened in the 80s. And no secret that CNBC, Fox Business, Yahoo Finance, the floor of the New York Stock Exchange, that is a stage. That is all for show. But we don't need to go there because I made my living there and it was good to me. But let's talk 1975 May Day. And we're not talking Soviet, Svimver, Dinover. We're talking May Day for a different reason. What is it that happened on May 1st, 1975 that set up the world we now live in?
Yeah, great question. So May Day 1975, we went from fixed commissions to negotiated commissions, which brought on the onslaught of the discount brokers. Think about it. A 1,000 share trade in IBM round trip was about $1,200. Today, you can do that for nothing. There's no transaction fee on that. But Charles Schwab, Rose and Company, the discount brokers, and that allowed Main Street. It put them on a more equal level playing field with the institutions and the professionals. So that's what May Day 1975 was. It brought on the discount brokers, much more cost-effective trading. A lot of the things that have happened over the last 50 years have wrung out billions of dollars in cost. Today, the barriers have come down completely. The individual investors are on the same level playing field as the institution.
So you brought up NASDAQ and you brought up the introduction of electronic trading in the 1980s. And having covered the Madoff scandal, I interviewed Madoff in prison. His brother Peter Madoff was instrumental in helping write code that created NASDAQ. What are we talking about? Is that what you're referring to? That starts in the 1980s?
The Madoffs were big on NASDAQ. I actually know both Peter and I knew Bernie as well. It was a small industry back then. Everybody got to know each other. And if you worked for an exchange like I did, you got to know those folks pretty well. But they were third market traders, okay? They used to make markets upstairs. They used to make markets on NASDAQ. But no, I think that electronic trading, the advent of technology, even the trading floors had to adopt technology. Think about it. Back in the 70s, 80s, if you had on a trading floor, you used a telephone, you wrote a ticket, you gave it to a runner, they brought it into the crowd, and people were waving their hands and yelling and screaming.
Trading places, the famous scene when they're selling, the orange juice futures. Get in there and sell.
And then, of course, later on in the late 90s, early 2000s, it brought the algorithmic traders who really changed the game, and that's the reason why you can handle the kinds of volumes. Back in 2008, okay, you're trading maybe 5 billion shares a day, and that 5 billion shares a day would shake the systems. As I said, on April the 9th, we traded 30 billion shares a day without a blink. There was no problems at all. The markets were humming because of technology. Technology allows things to move a lot faster, more effectively, more efficiently, and it wrings out all the cost in the business. So
okay, so let's talk. What made that possible, though, was the 1990s with the internet and online trading. And I'm talking about the You've Got Mail. That guy lives in Akron. I used to live in Cleveland. I years ago got to meet him when he came to our TV station. But how did that seem to be the foundation that has created the ability today to trade 30 billion shares in one day?
yeah, so many of the exchange, well, NASDAQ, the form of electronic trading, you didn't have to be in a physical place, or yet you could sit at your desk, you could be in a building, and you have access through telecommunications to the markets. Many of the exchanges that adopted that technology, they allowed their member firms to reach their trading floor through telecommunications as well. And then, of course, when the internet came into effect, now investors can go online on their computers and bring up a trading platform and get direct access to the trading floors as well. But just think about 1987, October 19th, 1987, because we were talking about the significant volatility that we've experienced just about 5 weeks ago. In 1987, I was an executive at the Philadelphia Stock Exchange. The market was down 20.5% in one day.
Right.
And that was the first billion share trading day. And by the way, we didn't reach a billion shares after that for several years. But a billion shares traded that day, and it was incredibly challenging. And some exchanges wind up shutting down because there was not straight through processing. Paper got stuck in the pipes, and they had to basically shut their exchange down to empty the pipes so they can process the orders.
So let's finish out the 1990s with ETFs. Because this is the point where I'm coming into the scene, and I've been a passive investor with, I would be cursed for this today, but it was mutual funds. I didn't have access to ETFs until the 90s, and even then I didn't understand them. How has that leveled the playing field? And would you make any changes to the way this has all happened?
Well, in terms of mutual funds and ETFs?
Well, the introduction of ETFs.
Yeah, so exchange traded funds were introduced back in 1992 by the American Stock Exchange. Actually, I was an executive at the Philadelphia Stock Exchange. We had the forerunner to the product. It's a famous Third Circuit Court case. We brought the cash index participation, which was the forerunner to the ETF. And what happened then is the commodities exchange, or the futures exchanges, sued the SEC for approving our product. And the case was heard in the Third Circuit in Chicago. And Judge Easterbrook, it's the Easterbrook decision, said that while this cash index participation, by the way, we listed a cash index participation on the S&P 500, and we listed a cash index participation on the Dow Jones. So again, the first foray into the ETF business. And he decided that while this had every 99% element of securitization, it did have an element of futurity, and he struck the case down. And then, of course, everybody went to the drawing board. The first exchange, though, to bring an ETF, as we know it today, was the Toronto Stock Exchange, not the American Stock Exchange. They listed an ETF on the Toronto index, and then, of course, spiders came. And they floundered for a while. It came in 92, and ETFs were not really popular in the beginning.
When let me interrupt real quick. When did the liquidity that an ETF provides, so that you don't have to wait till the end of the day for your mutual fund to settle and then to sell and do whatever you're going to do? When did people start to appreciate that factor with an ETF? Yeah,
probably late 1990s, early 2000s, when actually the investment banks got into the business of issuing these ETFs, and the market makers started to place, and you created the creation redemption process. But let's talk about ETFs today, right? Okay. ETFs now far surpass, in terms of net assets far surpass mutual funds. In 2024, globally, $15 trillion in ETFs. 10 trillion of that 15 is in the United States. While mutual funds, 3 years in a row, okay, have bled cash. Bled cash we had net assets out. In 2023, $512 billion net assets out of mutual funds. In 24, $388 billion left mutual funds. And in 2025, another 21 billion have left. So that's important too, because when ETFs first came to the market, all the mutual funds in the country were against it, right?
Yeah, now, I wonder why.
Well, but now, I remember, true story, 1996, I met with the chief investment officer of Vanguard. I eventually went to Vanguard. I went to work for Vanguard, and they said that we would never bring an ETF. When I went to work for them in 1998, Gus Sauter called me into his office and said, we're getting into the ETF business. Yeah. So now you have just about every mutual fund company in the business involved in the ETF business are big issuers of ETFs.
This has been to the great benefit of people who, I'm not in the financial world. I was a TV reporter at a 401k, and all of this helped people like me save up for savings as our pensions were decimated and put to pasture. In ways that, had these things not taken place, we wouldn't be able to have a future. Do you think we could have this kind of revolution in finance going forward, or are we kind of at peak efficiency?
Yeah, no, I don't think we're at the peak. Listen, AI, what's that going to do? Nobody really knows, right? What artificial intelligence is going to do, and we already know that it's creating some amazing things in terms of how it processes data. What about crypto? You got cryptocurrencies. They're not going away either. No, I don't think that the innovation has peaked at all. It continues to come. You have all these fintech firms. Technology is the X factor, right? With technology, it allows you to do so many things so much more quickly. The way we process business today is far superior than it was even 10 years ago. As I said, we couldn't have had a 30 billion share trading day 10, 15 years ago. Now we're handling, the exchanges are handling it with ease.
I'm going to ask a Luddite question about algorithmic trading. If the algorithms were so wonderful and perfect, and we had the hiccup, it was 97 long-term capital management. But if it was so perfect, why wouldn't everybody just do it and make trillions of dollars and go to bed?
Well, the algo folks were young men and women coming out of business school with an engineering degree and a math degree. Old habits die hard. The market makers, let's take a firm like LeBranch, who was a big publicly traded specialist on the floor of the New York Stock Exchange, had a multi-billion-dollar market cap. They were publicly traded. That went to zero. Okay, a lot of those market makers and specialists basically fought the algo guys. That was a whole new breed, and nothing's perfect. I wouldn't say algos are perfect, but they make the market far more efficient because we think about it. It wasn't too long ago that 30 seconds was the time of a trade process. All the exchanges would communicate through the intermarket trading system, and they would have 30 seconds to respond. Today, you're trading in microseconds.
Yeah.
That's
Michael Lewis's book, laying the fiber cable from New York to Chicago.
Yeah, no, I think algos initially got a bad name, but I think that the U.S. stock market arguably is the most efficient market in the world, and the algos are the next generation of market makers and specialists, and they use computers, to basically run those algos, which makes the markets, from a pricing point of view, far more efficient today than they ever were.